All right, everybody, welcome back. Periodic versus perpetual. When you see periodic from here on in, I want you to think two things. Number one, purchases. When you buy inventory and you're using a periodic system, we debit purchases, not inventory. So purchases. The second thing is we need a physical count of ending inventory at the end of the period so that we can back into what our cost of goods sold must be. So if you take your beginning inventory, what you purchased, that's everything you have available for sale. At the end of the period, whether you do this quarterly, semi-annually, or annually, at the end of the period, once you know your cost of goods available for sale, subtract what you didn't sell by virtue of a physical count. That tells you what you did sell. Periodic, you think purchases, and we've got to do a physical count of ending inventory. Perpetual, you don't do those things. Perpetual, every time you buy inventory, you debit inventory. Every time you sell inventory, you'll credit that inventory and debit cost of goods sold. So let's do it. Okay, periodic. What do we need? When we buy inventory, you debit purchases, and the quantity of inventory is going to be determined by a physical count. Now, that's going to be done, obviously, at least annually, but it might be quarterly, might be monthly, might be semi-annually, but at least annually. Okay, so the units in ending inventory and those costs are counted and valued at the end of the period. Once you know the value of your ending inventory, you subtract that from everything you had available for sale, and then you back into your cost of goods sold. So you got to know that formula. Beginning inventory plus your purchases. Remember, when you use periodic, we debit purchases. Purchases includes freight in, but net of any discounts. Beginning inventory plus your purchases gets you everything you have available for sale. Then at the end of the period, we back out what we've counted, the ending inventory, both the number of units and the value. We back that out, and there's your cost of goods sold. Now, you know what they're going to do to you. What if the ending inventory is overstated? Somebody went in there and counted, but they counted incorrectly. If the ending inventory is overstated, then your cost of goods sold is understated. If your cost of goods sold is understated, then your profit's overstated, making your retained earnings overstated, making your equity overstated. Now think about it. Your balance sheet's got a balance. Assets have to equal liabilities plus equity. So if your assets are overstated, if you overstated your ending inventory, then your equity's got to be overstated as well. But why is the equity overstated? Because by overstating ending inventory, subtracting too high of a number, cost of goods sold is too low. Profit is therefore overstated, making retained earnings and equity therefore overstated, okay? Only one journal entry when you sell the inventory, folks, and with a periodic system, only one journal entry. Debit your cash or receivables, credit your sales. That's it. We do not debit cost of goods sold and credit inventory. With a periodic system, you only have one journal entry upon sale, and you debit purchases when you buy the inventory. What if they tell you you're perpetual? Then we're going to update inventory every time we buy or sell a unit, period. When you buy something, you debit inventory, and when you sell it, two journal entries, debit your cash or receivable, credit your revenue, and immediately debit your cost of goods sold, credit your inventory. So with perpetual, you debit inventory when you buy it, and when you sell it, two journal entries. So we keep track of actual cost of goods sold. That's determined with every sale, okay? So we keep track of the number of units and the cost perpetually throughout the year. We've got that running total of inventory balances, okay? So the question becomes, can you nonetheless do a periodic physical inventory or a test count? Absolutely. That's good internal controls. No one's saying you can't do that. You can do it. But with perpetual, that's a can do rather than a must do. With periodic, you must do it because you're going to back into cost of goods sold by first physically counting the number of units and the value of your ending inventory and then backing into cost of goods sold. So with periodic, you must do a physical inventory count. With a perpetual, you should do it, right? It's good internal controls, okay? Whether it's randomly or cyclically, whatever. I want to make sure nobody's robbing from you. Okay, so easy as can be. Periodic versus perpetual. We purchased 50,000 units of merchandise for $6 a unit. 50,000 times 6, $300,000. If we're doing periodic, what are we debiting? Purchases, credit your cash or accounts payable. If we're doing perpetual, we know we debit inventory, credit cash or accounts payable. Periodic versus perpetual. We sold 20,000 units of inventory at $7 a unit. Periodic, one journal entry. Take your $7 a unit times the 20,000 units you sold, debit your cash, credit your sales revenue, $140, you're done. Perpetual, two journal entries. Journal entry number one is the same, debit cash, credit your sales for the $140, but then we have to calculate Well, what was the cost of what we sold? So we sold 20,000 units at a cost of 5. Debit cost of goods sold, credit inventory for $100,000. Okay, perpetual debit inventory when you buy it, 2 journal entries when you sell it. You're in good shape. Okay, hybrid inventory systems. Some companies maintain perpetual record keeping, but for quantity only. Okay, that's called a modified perpetual system. Okay, the dollar amount's not so much, but the quantity they want to keep perpetual records of, when you see that on the exam, that's called a modified perpetual system. Regular perpetual, we keep regular count of both the inventory as well as the cost. If it's just the inventory quantity, that's called modified perpetual. And then lastly, most companies that do perpetual nonetheless probably still perform, periodic physical inventory counts, good internal controls, okay? So whether they do that at the end of each period or randomly or cyclical, whatever, but they probably still do that anyway. So that's perpetual, but with a periodic at least a year end, just to make sure nobody's robbing from you, right? Okay, now I'll let you guys go. So try some multiple choice just on those topics and then come back. We'll do some more, right? Easy stuff. Let's go.